Hey everybody. Okay, so welcome back. This is I hope you can see that screen there. Forgive me for the quality. There's a lot of things that you can't actually find online for some reason, but this is posted by AGF Fund Company. This is a continuation of the solution that we come up with the taxes on the last presentation. And before I get into building the portfolios with you on Morningstar, just have a look at this picture here. And it shows that across the top, if we have a rate of inflation, 1.2 all the way up to 4, if you come in the middle over to the right here, 2.83%, what this shows you is if you go back to that situation that we were working through on the FIN number and the taxes, there's about a 24% tax rate. Okay, so if you're on the left side here, if you take a tax rate of 24% and you run this across to inflation of about 3%, you need to have a 3.95% rate of return on your investments to break even. And this is crazy, and I think maybe the banks have a conspiracy about not posting things because can you imagine, anybody at the bank having a clue, offering GICs, offering, like we had shown you one of the first slides of RBC high interest savings, 2.17%. So this is a piece of material that I always carry around with me as well. And I think you'll find that helpful. It's another frame of reference. And so let's go into here now, and I'll show you. Once you're on POL here, if you come over to the products tab, I'm already partway there, but just drop down to the investments, and then on the left side, scroll down here, Morningstar, and you can go the illustrator right here. It'll ask you to agree, and then it'll ask you to most times put in your social insurance number. I was already there, so if you want to go into here, there's a couple portfolios that we've built, but I'll just show you real quick how to do this. There's a couple defaults that you want to make sure that are safe. So let's go new illustration, and you can do anything you want in here, but let's just go in here and drop down to segregated funds, and you can start typing in Primerica, and you'll pop up with all the options from that AGF has through the asset builder 2, 3, 4, 5, 6, 7. So let's just go middle of the road, asset builder 4. We can walk you through later how to choose each one based on date of birth. But so let's go in there, and it'll pop over to the right. Then you go into the buy tab. Now this is important because if you are here for the first time, you might show up with a currency of US. Make sure that's Canadian, allocate by Canadian. And then on the buy tab here, you can put any number you want. This just says 10,000. And you'll notice that what we're doing is I showed you a one-page portfolio in the beginning. This is where that portfolio came from. And you can pick a time period here, 1, 3, 5. Whatever you choose, it's going to give you a report anyways on one of the last pages. So I just go since inception, January 31st, 94, this fund started. It'll run you only to the last full month. So right now we are the 25th of October, and so it's giving you end of September. And then the advanced buy sell, that's you can go into these details if you're back testing a very specific portfolio, maybe with dollar cost averaging and monthly deposits, withdrawals, and that. But just for this basic illustration, just go over here to the report options, and you can click off portfolio. There's many different indexes, just composite TR, and then cover page, marketing page is great. Portfolio X-ray, there's a lot of detail. Snapshot is just gives you your general overview. And then report title, you can put anything you want in here. If this is a seg fund, you could put, say, balanced investor here, client name, whatever the client's name is, prepared by yourself, and it'll automatically pop up. Now, when you do these and you save them, and you go back every month and sort of update it like I do, make sure that you change, you'll have to change this date down here, and you'll also have to make sure that you change the end date for the most recent full month. And then go up into generate report, and it'll give you that breakdown that I was showing you earlier. And here's the marketing page, absolutely fantastic. And there's that return that we showed you, 6.8 since 94, tracks the Toronto Stock Exchange, and then you've got the fluctuating, the balance, and then the rate of return for the years there that we'd shown you before. And then if you keep going, it gives you the details of the sectors in the snapshot there. And then it gives you some of the 3, 5, 10 since inception. Now, you can do anything you want in here. You can build, there's some concert stuff that's in here right now, and this is common sense, and I've got a few in here that I use, but that's just an example. And so that's pretty basic, but to give you and the only difference is when you're choosing multiple funds, on the buy tab, you can list, if you go into mutual funds, just type in a fund company, for example. If you go into AGF, I mean, you're going to get everything AGF, everything Dynamic, anything Fidelity, Mackenzie, anything. And doesn't matter whose portfolio you get. Sun Life, Investors Group, Edward Jones, RBC, everything's on there, and it's the most powerful, one of the most powerful tools, because it's straight right across the board. And so I'll show you something else here. And the whole purpose of this video right now is to talk about behavior, and I'll show you where we're going, because sometimes, and I've got something kind of at the end that I did a little different. It's interesting when you ask people, so, if I said to you, let me have your money, I'll put it in the stock market, what do you think of right away? And I just wait for it. I just tell me exactly what you're thinking. And it's very interesting. And so the last piece of this will just really smooth some of those fears for people that we've used for years, and I hope it'll help you. So let's go back. AGF on their platform here. There's some really cool stuff here. And if you go under education and tools, over here where that income tax calculator was, if you go up to sound choices, this will bring up the latest sound choice, the quick reference guide. And there's some charts in it. There's a lot of info in here, but there's some really cool charts that we use and carry around. And this is all, you can access this. We can get this for you, no problem. But this is kind of cool. If you go down here, let's talk about for a second. Now, everything is behavior. We said before that there is no statistical evidence for the persistence of reforms, which means nobody can tell you exactly what's going to happen tomorrow. But when you study trends, which the fund managers do, and that's another thing you might want to make note of. When anybody comes at me or makes a comment to me about, knowing when to buy and sell, I think that's incredible. And so I always ask them how they do that, because you got to buy low and sell high. And yet there are so many factors you need to watch that if you were really that good, then you'd probably be working for a fund company. You'd be a fund manager or an analyst or whatever. But I can promise you this, when we're done this video and you see that presentation at the end, that you're going to realize that inflation is everything and behavior is everything. So this chart here shows back in 1987, so all the fluctuations in the market, and it shows you the return of a GIC. If you got the TSX, the S&P, and just a couple, well, 1, 2, 3, 4, 5, 6 times when everybody thought the world was ending. Well, here's another one. This is a list of all the bull and bear markets from 1956 to the end of 16. So we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 bull markets, and we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So one of the things that you want to be watching is some people ask you, why do they call it bull and bear market? Make just kind of a side note is that when a bull attacks, it drives its head up, and when a bear attacks, it paws down. That's why they call it bull and bear. I mean, that kind of cool. And the last one we've got here is, and this is a huge deal, because this is why somebody says, I know when to buy low and sell high. Well, no, you don't, because you don't know where the bottom of the market was until we've come out for 8 to 9 months. You have no idea where the top was until it's fallen for 8 to 9 months. Well, I love this chart because it shows from in 1948, the Berlin blockade, we got Korean War, stock market break, we've got Cuban Missile Crisis, Kennedy assassination, you've got the stock market crash of 87, the Gulf War, terrorist attack, and then you've got the October 08, the peak of subprime mortgage market collapse. So, and you look at the 1-year return here after, and then the 2-year return after. And so I'll show you, and there's a lot of charts in this booklet. This is probably the most powerful in-your-face sort of behavioral chart that shows, okay, 1997 U.S. stocks, then and all of a sudden Canadian, and then you look at the fluctuation of, what was hot 1 year. Very, very rarely does it have a trend that follows 2, 3, 4, 5 years. And the fund manager's job is to, we have the easiest job in the world if we actually stick our pride and ego in our pocket and go out and serve people instead of trying to be the answer for everything, because we don't know what's going to happen tomorrow, and we don't have the ability most times to watch politics, currency, unemployment, governments, all the things that are happening in every country around the world to make a judgment call on where somebody's money should go. And a lot of times, especially if you're new, clients are kind of maybe concerned a little bit that you might be the person that's making that decision for them, and you let them know, no, actually my job is to set a goal for you and protect you if you die too soon and protect you if you live too long. And I take an analysis and I do a financial needs analysis for you, and the fund managers make the suggestions for you based on many different pieces, and that's very comforting. So I'll show you this this chart here, and it's kind of scratchy, but you'll get the gist of it here. So the first thing is, let's talk about behavior, because the stock market actually likes you. And I when you walk people, everybody, it's kind of like the lottery. They kind of would like to know. They hear stories, and what's really cool, if you go back to May 29th, 1946, the TSX was 1,190 points down at the bottom. The very next day, it fell to 19 points. Now, every time I mention that to somebody, they go, "Oh my goodness, I didn't know that." Well, it's kind of irrelevant actually, because nobody was even around then. That's really now today. But here's what's cool: if the markets have averaged between 7 and 11%, and I'll show you real quick down here. This is the picture of your index chart. Now, everybody has this. This is just a snapshot of the right-hand side above the inflation line. So inflation has been 3.6, T-bills, bonds, income portfolio. Now, the balanced portfolio, so anywhere from 8%, 7% to 11%. And this index chart is actually going back, the one I'm using, till 1934, which is a long time. But here's what, when you follow this and you say, okay, markets have averaged, if the markets have averaged between 7 and 11%, which they have, and there's been 14 market corrections, there's been 14 market meltdowns, then why did the average consumer receive less than inflation? So we're talking about buy low, sell high, yet it's really easy to say, but you got to be right twice, and you got to be right twice every 5 years, and I haven't seen it, and I'm willing to be challenged on, show me how you do that. So let's follow this, and this is just a squiggly line of and the exact amount of them is not 14, but that doesn't matter. But you get the idea here. So that part right there that says 51% drop, everybody kind of remembers that more than the others. But what they don't realize is, if you go back here to this side here, this is every 5 years we have a run in the markets. Every 18 months we have a correction. That's been the average, and we've lost 20 to 30% on average. And inside that sound choices, it'll actually give you all the runs, the corrections in the bull markets and through those times. This is just something that I draw quickly on a piece of paper for people, and we talk about buy low, sell high, yet you have no idea where the bottom is until we've come out for 8 to 9 months. You have no idea where the top was till we've fallen for 8 to 9 months. And yet there's been 14 corrections as we go through here, and the markets have averaged 7 to 11%, but the consumer is still afraid of the stock market. And when I say to somebody, give me your money and I put it in the stock market, and they go, well, most of them go, not a chance. And I go, what's interesting is every dollar in the world is in the stock market. Most of it anyways. T-bills, bond stocks, real estate business, it's all there. But what you got to figure out is that line right there, all you had to do is stare out the window and leave it alone and buy simple investments, and you would have averaged between 7 and 11%. This up here is when the market started to shake. Market fell 51%. March 2009, there's another bottom and another one. And it wasn't until the spring of 2011, right up here, when the bank announced, yeah, we're out of the recession. They had missed it by 2 years. Absolutely crazy. So the secret is behavior. And the whole process of where we're coming to now is, I hope you understand that where we started with is everybody says they're okay, but we know the stats that they're not. So instead of running people over with information, and I know it's kind of feels like this with this, but I think you'll appreciate starting with basic, starting with the FIN number, and then walking through solutions. And a lot of our people are meeting 2, 3, 4, 5, 6 times with families, because we're not just walking in there selling life insurance. We are planning for their futures. We base our futures on having their assets for 20, 30 years. And you got to do a great job. And one of the things that the keys to being successful in financial services, especially in Primerica, is that you do what's right 100% of the time, and you don't push, and you educate, and you ask lots of questions, and I promise you it's going to be amazing. And I hope that's helpful. Thanks again.